Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Thank you, Marty. And how we doing in YouTube? Thanks, Dan. And good morning, everyone. Welcome to TraderLab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles of chassis in the intraday developing time frame. It's based on structured trades that are available to everyone to reverse engineer, make your own, adapt to your time frame, if you will. And the process you see here in the stream can be used on any product, whether it's stocks, options, crypto, anything, futures, any market that moves and has volume. The basis of the way the market works is actually an auction. And why do we have markets? It's to figure out what the thing is worth. What's too high, what's too low, what's fair. And in this process, we get rotations. And if you're a day trader or even a swing trader or a position trader, it's all a function of time frame because the market always rotates. Even if you think you're in a bull market, the market just doesn't go straight in one direction. It will rotate. And because there's always two sides involved, and the market tends to rotate over itself. So if the market gets lopsided one way, it's almost like a boat. Everybody's on one side of the boat. It's going to recenter itself and then maybe swing the other way too far. And it keeps rolling back and forth. And the market tends to roll back and forth because of the different participants that are positioned in that market in their time frame or fractal. And not to make it confusing, but the idea is that all markets work the same way. So if you can identify a process and create plans that might be in alignment with the market and the time frame, if you will, that you actually want to operate in, and then extract the statistical edge based on behaviors that you could identify and then get in alignment with that market at times, and you have an edge, you can over time extract dollars from the other participants. That's really the business of trading. Now, many of us think the business of trading is many other things. Indicators, moon cycles, luck. It's many things, but one thing it isn't is gambling. So if you're making it up as you go, if you're gambling, then you're just seeking entertainment. And I think there's better places to go for entertainment. But if you're interested in the business of trading, this is what the TraderLab is about. And this is why you will see high-tier order flow tool like Bookmap and how it might be integrated into actually fitting it into a structured plan. And now, again, every trader develops their own plan, but the purpose of TraderLab is to help traders understand the business of trading, how to put trade plans together, how to vet and determine if they have an edge, and then deal with the psychological impediments that we all face. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Hold on. My ears are blowing off here. I hope you're not hearing an alert going off. I'm going to try to fix that. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. If you have questions, please post them. I'll do my best to get to them. And if I can't answer your question, feel free to come to TraderLab. There's a link in the bottom of YouTube. There's no cost for it. And it's a community of like-minded traders that come together to leverage their collective experience. Doesn't matter how long you've been trading. What does matter is if you're interested in a professional community that is all about the business, then, of course, feel free to visit the TraderLab. And there is no cost. Once again, you will not be solicited or abused. So there. This is what the 60 PDFs of structured trades look like. These are done a long time ago. I'm not a vendor. There's no cost for a trading course. This is really a function of all the participants that have come together in TraderLab. But many years ago, traders were asking me what I was doing, so I threw some things together. Whatever you see in here, you have to vet. And if you come to TraderLab, we'll certainly can give you suggestions on where to start. And there's 60 of these, a lot of different phenomena, algorithmic behavior, things of this nature, things you might be interested in that might help you along your way. And again, you have to do the work. There is no plug and play. Wouldn't it be nice? Except there isn't. So this, I'm going to show you some structure so you can understand maybe a way to look at the market and attempt to interpret it. Now, everything we try to do in trading is we attempt to do it. We don't predict anything. I think we want certainty, so that means we want to be able to predict something. Hold on a second. Again, are you guys getting alarms and alerts and all kinds of things going on? You are? Okay. Lovely. Let's see if I can do something about that. There you go. Magic. Okay. This is a higher time frame, if you will, and time frame is a function of your perception of time. For me, these are RTH candles. This is a volume profile, and by interest is the all-time high and the last swing low in this consolidation. So the high, the low. Previously, this was the all-time high, and then we had what's called a trend day up, and we broke out of it. Now we've been consolidating up here the last couple of days, and this is Friday. Now let's talk about what you see here. What is this? Let's take a look at what we got. 6480 is where the highest volume is in here. So think of it as shopping. Trading is shopping. You know how to shop? You have the basis or the fundamentals of trading. What's too high and what's too low. Now 54 is a very important level, and I'll explain why in just a few minutes. So you just hang out for a second. Let's look at this. This is an outside edge. Think of it like pricing in your store. Oh, it's on sale, and traders buy it. And then we come back to the fair price, and we do most of our business in the store at a retail price. Buyers and sellers say, okay, let's do business. There's a lot of volume. But if the price gets too high, you'll notice the volume dries up, and you'll notice we have a tail up here, and the market didn't stay here. What does that say potentially? Maybe the price is too high. So the price is too high, the price is too low, and we rotate. So that sets up identifiable locations. Now, this is intermediate time frame, if you want to think of it that way. You could call it whatever you want. The high volume is here at 80. Now, yesterday or Friday, 71.75, and each individual RTH candle, this is the high volume. So as we go down in time frame, so this is intermediate, we're encompassing all of this, and then we go to each individual day. High volume was there, 71.75. Remember, 71.75, and remember 80, and we have another one here. Don't forget, 71.75. Write that down. Just write it down. You might find it unique. Write down 54. And of course, we know about yesterday's low. Okay? And what do we know here? We know there were stops under here. That's Thursday's low. And then we have Friday's low, and we closed on the low, pretty much. And the value and the volume move lower. Retail price. I'm not paying that. I'm not paying that 85. And I'm certainly not paying that. Well then, yeah, but this is too low. Scratch the head and go, what we doing here? Well, for me, and this is not a recommendation, I'm going to show you a couple of things. I'm going to show you what my thinking was. Now, my thinking doesn't mean anything. All it is a trade plan. Now, let's come back. This is a market profile. It's the same thing, except now I'm showing you individual RTH days and the distribution of volume. Now, let's come down here. This, try to see these numbers here. Roughly 64.14. Right here, there were 2 days that overlapped, and you see this orange line. This is the high volume for each of these RTH days. That was the fair price. And then we broke out, and we have what's called a trend day. And how do we know it's a trend day? We didn't get this. We didn't get too high, too low. What we got was, I'm out of here. I'll send you a postcard. I'll let you know where I end up. And let's come back here. What's at 14? This. That's those 2 days I just showed you. I just want to see how it fits together. Now, 54. Let's go take a look at what this 54 thing is all about. 54 is up here. This is an outside edge, so it's here, 54. And then if we get under 54, there's really not much over here. We have possibly 39, we got 43, and if we come all the way down, theoretically, and that's the term, theoretically, if all we can fill this all in again because it's not auction. It was I'm out of here. However, the higher time frame is up, the real high time frame. So we have a uptrend, and then we're trading the intermediate time frame and then the shorter time frames inside. So this is the lay of the land for today. We get under 54. I call it the Acapulco cliff dive, and that isn't a recommendation. It means we can come down and start filling in this area and start rotating in here. If we really get rolling, we can come back here. This is the last area that was too low. So you can kind of see the logic. This is too low. And right now, 85, wherever it is too high. Or 80, too high. So we have 14 too low, 80 too high, and then in yesterday or Friday, 71. Just remember. So, and now let's look at Friday's behavior. This is Thursday's high. We open above Thursday's high. Now, what's up at Thursday's high? Stops, right? And what happens here? Well, either we're going to open and rotate and go higher, or this, what's this? I'm not paying that. Yeah, but it's on sale. Rotation. And then if this little high volume becomes too high, and 85, which is an important price from Thursday, becomes too high, what do? I'm out of here. And then it's shorts, and a couple longs, but Friday stream, it's all shorts, mostly shorts. Couple counter trend longs, but shorts. And this is called mean reversion. Let's look at how this works. If that's the retail price, remember high volume, and I open up here and I do my thing over here, this is support. When I get below it, I'm not paying that. First of all, it was too low, too high, and then if I get under it, now what was too low? Think of this like shopping, the retail price. Now the traders or the shoppers will not pay it, and now we go the other way. Okay? And now this, which is the retail price, moves down here from Friday. What does it say? Language. Well, maybe this is too high, and 85 is important. This is the new retail price, and if we take out 54, we have the potential for the Acapulco cliff dive. Now, let's come back. Let's look at this. This is the ETH, and this is the full session profile. So this is Friday, the whole thing, and this is as of, I think, about 6 this morning, maybe. Can't remember. So where's that 85, 86? What is our ETH high? Anybody know? Let me see if I can find it. 84 and a quarter. Is this interesting to you? 84 and a quarter is the ETH high. Where was our separation on Friday? There. What does it tell us? ETH high, too high. This is Friday. Now, let's go to our ETH. What is too high? 85. I'm not paying that. Now, let's go a little further. This is Friday's retail price, 71-ish. Fair price. But what was too high in the ETH? Here. What was too high on Friday? Here. Where is Friday's fair price? Here. And where is Friday's low volume node? 73. Is everybody tracking? Now, so you know, why am I doing this? Not to torture you, but this is before the RTH open. So for me, my plan primarily for today, no matter what happens, is to start out looking for shorts. That's the reason. But why? Well, yesterday's low. What's under yesterday's low? Stops. RTH open. We're opening lower inside of yesterday's range, but lower. Where is the 71? That's the retail price from Friday. Where is that ETH low volume node? 74. You remember that, right? This is the retail price, 71. We have 74 from the ETH. Let me take you back. I got to show you how to use tools. Now, the idea of the auction, there's no indicators in here. 74. See where it is? Low volume node. What is this from Friday? Low volume. You know something similar? On sale, too high, break away, you're crazy, too low, too high. What happens in the ETH? Back here, too high. What about over here? Who knows? Low volume node. Where do we go now in the RTH? Where's our low volume node? I lost it. I did. I'm losing it. It's up in here, I think. Let me move this down. So the 85 is a low volume node. And then in the ETH, we have the 74, 75, and we have this. Notice where the current high of the day is. This is before it all starts. Are you guys with me so far? How we doing in YouTube? Hope you're getting something out of this. So this is TraderLab, guys. Now, what I'm trying to share with you here is in the business of trading, it's not what will happen, it's what might happen. The other thing is, where might it happen? And then waiting patiently for the market to get where it might happen. And the thing about where it might happen is you have to identify the condition of the market. And part of the joy for us is the condition's always changing. In other words, it transitions. It gets directional, then it comes back on itself, or rotational, and then it gets direct. It does whatever it does. And our job is to attempt to align with the market. And that can be pretty tough depending on the condition. Well, the condition today is a difficult day to trade. Now, it is very tradable, but it's also frustrating psychologically because when you're in this condition, it's not difficult to get either chopped up or to be taken over by your emotional state because of frustration. And this is really where I think balance is this condition is the most often the condition that we find ourselves in, if not continuously, at least at different times during the session. So we need a way to understand what's going on and to have a plan to trade it. This is called mean reversion, underlining the term mean. So RTH open. Now, for me, my plan is to sell. Doesn't mean it's a good plan. It just is the current plan at RTH open is to look for shorts. And there's another piece to this. The market is short from Friday. So it sets up a bit of a dilemma because we have shorts in here from Friday. If we get additional selling, those sellers can get squeezed and so can the shorts from Friday, right? Then if we squeeze the shorts from Friday, depending how far the squeeze goes, and any early sellers, then we get longs in here. But then the longs could get thrown under the bus and then the sellers come in and that creates rotation. And this is extremely confusing. For all of us, by the way. It doesn't matter how long you've been doing this. What is important is that you identify the condition and you know where you will trade if the trade that shows up at a level that you've vetted and it fits your qualifications for your edge. After that, as they say, all bets are off because the outcome is random. So I'm not saying this is a good idea. I'm just saying this is what I do only because it's just easier for me to do it. And mentally, it's less wear and tear. I pick a side. And I'm just giving you an example. And I definitely want to say this is not necessarily what anybody ought to do. In TraderLab, we have traders that are on the long side. We have traders on the short side. We have traders that are on no side. And we have traders that are different time frames. So they're trading different rotations, you see. So I tend to trade for larger rotations only because it fits my psychology and my risk reward. So for me, it's not about a high percentage of winning trades. It's a high risk reward. So it doesn't disturb me as much when I take a stop because I'm not dependent. I can take smaller stops relative to my potential. So one way or the other, it's like a scale. You're trying to balance out risk, reward, frequency of trading. And a lot of us come into this business thinking that if, you're going to trade a lot, quote, you're going to make a lot of profit. And yeah, maybe, maybe not. What I have found is every time I put a trade on, I take risk. Hallelujah, there's an insight. What else does that mean? That increases my probabilities of taking stops, not necessarily profitability. So instead, what I do is since I'm in a random environment, I'm going to take stops no matter what I do. If I take less trades, I take less stops, but then I have more opportunity for swings. I don't know if that makes sense to you. And subject to the conditions, I can take a lot of trades, continuation trades, but my thing is really more range oriented because that takes care of the stops. Just how you get to the outcome that you want. And it doesn't matter. There's not a right. It's like, well, this is right or wrong. No, there's not a right or wrong. There's only edge. Now, for me, it's just shorts today. Other traders are long, short, and that's their skill. It's not mine. Now, I'm going to say it used to be, but I'm just more laid back now. So let's take a look at this. So this is the RTH open. Now, I'm looking for shorts. So I've got to be thinking about where do I find my trade? I've got a high probability of taking out either yesterday's high or low, considering where we are. The low is closer. I'm opening in range, but my volume point of control, the retail price from Friday, is here, and settlement is here. And I got overnight mid, and somewhere around here, I got the overnight volume point of control. Hold on a second. That's around 64.5. So I got to put this in here. We opened here, RTH opened. It's covered up. I just want to put this in here so we don't forget. So we opened here. I'm near this, and we don't know anything yet, okay? I know I got stops there. I know the market was long, so that means there's fuel in the market. And I know 54, by the way, what is it? Look, I forgot to mention this. Look where the ETH low is. There's 54. And this is that key level I've been pointing out to you, 54, ETH low. And also, I think it was last week on Wednesday or Thursday, one of those days, the ETH low also tested 54. So we've had two tests of the 54. Now, for me, that's a weak, but that's just my imagination. It could be the Rock of Gibraltar, but I perceive it as weak because it was tested in the ETH, not when the RTH was operating. That doesn't make it a strong low for me. It makes it a weak low. That's why I'm only trading shorts, and it doesn't mean anything because I can get thrown under the bus like everybody else. Nobody's special here, It's just maybe. Write that down. The best you have is maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do anything. So I'm looking for the short. So I know, what do I know? I know this is the retail price. I have about a 70%-ish probability to get there sometime today. I have about an 82% probability-ish to take out yesterday's high or low. I have over a 90% probability to take out the ETH high or low, and I have about a 90% probability to take out the first hour's high or low, which is called the IB. What are you going to do with that? Great question. Well, for me, I'm going to sell it. So that's just me. And I have to always say clueless, but not ignorant. Just clueless because it's random. And what do I know? In the ETH, that's a low volume outside edge. So I'm looking at this to get short. And if it pushes through up here, because this was too high. This is too high. In the last auction, which is the ETH, this is too high. This sets up my shorts, and then I have statistics. And if I get under 54, it is the Acapulco cliff dive or something. Not a recommendation because nobody knows. Now, if you have questions, post them. This, again, is all about before the market opens. And you're probably looking for trade. Oh, show me your trades. How about this? I can't trade unless I have a trade plan. And I can't trade unless I know the lay of the land and what my trades will be. Not what the market will do, what I will do and where. Let's look. So, open. I see open, move up, move down. So right here, I get VPOC migration. If you guys follow the stream, I spend time because I have a process that involves the use of this. This is a developing volume point of control. And all it is volume, high volume, shopping. Well, this is dynamic because this is happening in real time. So if this becomes too high, I'm going to leave it. And I'm going to come back to what was too low, too high, too low. And I'm going, and this is kind of like a bobber. You guys ever go fishing and use a bobber? And it just, you can see when it gets pulled under. So it's pulled under, it's coming back. I'm going, what? You know, so I'm looking for a location to get short. But I don't have range. So right here, I pull outside and I'm thinking, well, and this shifts up. I was looking at this thinking, well, maybe I should be thinking about a short up here. And I have the liquidity. So I'm looking at it and I'm going, well, and then I get this. So I'm going, oh, not yet. I know I have a location out here, all right, and up. So, and I come back and hold this. This is a variable high volume node. I'm just going to replace this. I made these terms up. I didn't know. When I first started doing this, nobody was doing this approach, at least that I was aware of. Nobody talked about it. And when I did talk about it early on in a market profile room that I was in, and this is before Discord. I don't even remember what they called it anymore, what kind of chat thing it was. But I was in there with market profile traders, and this is very, institutionalized thinking, as I thought of it. And I'm more of a curiosity. I'm a researcher. Like, what's that? What's going on? What's that all about? And then dig into it. You can spend many years digging into things. I did, and I suggest you guys don't do that because you can lose years. And I did. I lost years because I kept looking at things. Because I was trying to understand, everything works randomly. Why, this is just another random event. What does it mean? So you do some of that, and eventually you figure out something. This is a buy sweep. Right here, this sets up, and this is a location, overnight mid, value area low. All of these have probabilities, and I get the sweep. This sets up a short for me. I'm going to show it to you. And the goal is to come back there for a scale and then come across. I take stop, okay? No big deal, other than emotional wear and tear. I get another sweep up here. Now I'm trying to get short, as you guys know, and this is my next location. I get a sweep. I take another short. Same trade, different location. And all I do is I identify locations. I get a scale, and now I'm holding short, looking for the, to come out the bottom. And I get scratch. And I have to tell you now, the teeth are chattering, and you know how you feel, right? Feel. Remember the word, how you feel. I'm back here. Where's my next location? It's here. So what I'm doing is I traded locations. Here, okay? And here I thought I had a good shot to get yesterday's low. But that doesn't mean anything. I thought means I think, doesn't mean I know. So now, next location. And so, next location. And in the TraderLab, we've been having interesting conversations because traders are getting long. And I'm thinking, that's interesting. It's not right or wrong. It's like they're following their plans. I'm following mine. And I'm thinking, getting long here would have been a nice thing, right? Except my plan is telling me just get short. So I'm just taking my levels. Now, here's the thing about a trade plan. It's about alignment. So I don't know anything in the sense of rotations are random. Is it going to go up? Is it going to go down? What's it going to do? I don't know. So, but we come to the next location. And here's my trigger. So this is another short, and I'm coming back across again. So this time, I get yesterday's low. So I'm thinking, I got you now. But 54 is the area. This thing is really annoying. Look at this. Oh, let's come back. Where do we come? Right here. Sweep, another short right here. I've only been taking shorts. There's only been, I don't know, 4 of them, I guess, so far today. That's it. Hold on one second, guys. Do you have questions? Post them. You guys have questions, please post them. Appreciate you visiting the lab today. This is not love potion number 9, you know. Now remember, this is support. Now the market doesn't have to do anything. We can stay here. That's not my job. My job is to put my trades on that I have vetted at locations, and my first concern and job is to get risk neutral if I can. Or I pay for the privilege of taking a stop. Now, we don't like taking stops, right? I know. But have you ever thought about this is not a business of right or wrong, it's just a business of statistical probabilities, and there's no way to know what will happen. But I'll tell you, if you come to TraderLab, you can learn what might happen. And you can also learn where it might happen, not that it will, but and that's what vetting a plan is. Now, all of this that I'm sharing with you now was posted in TraderLab, I think by 6 a.m. this morning or somewhere in their central time. So hours before the RTH open. And it doesn't mean that things won't change. It doesn't. And the other part is, if this market comes out the top side, which it can, that'll set up something called a neutral day. A neutral day is where nobody's really in control. It's both sides, and it's sloshing back and forth, abusing everybody equally. So we got yesterday's low, and we haven't gotten the ETH high or low. There's over 90% probability we get one of them. And we did take the first hour's low. There's over 90% probability we get one of those, and you have to vet all these statistics for yourself, and they are available in TraderLab. You still got to vet them. So, in about a 29 to 30% probability, we take out the first hour's high. Now, we've been in balance or two-sided trade all day. We are either potentially going to fall out the bottom, and then things get very interesting, or we're going to potentially rotate across the range and squeeze these shorts out, right? Which is always possible. And if so, I can tell you what my next trade will be. And it's not a recommendation. If I come across the range and squeeze here, my next resistance is up around 80. If I come up in here and fall back in, and this is not a recommendation, I'm going to be trading shorts to revert back to what's called the mean. It's still mean reversion, unless I come out the top and then it's pedal to the metal and off we go. And then, I'll either take a stop looking to come back inside or whatever. And there's also possible I'll turn around and get long. I can't tell you what I'll do because I have to see, and my plan tells me what to do. When I come to market, I come with a plan. I do not change what I'm going to do unless the behavior changes. So I don't come here and make it up. I know what I'm going to do because I don't know what the market will do. But I don't want to be emotionally triggered, fight and flight, fear, revenge trading, the lunatic. We all have the lunatic in us. It's part of our wiring. So if you know you got a lunatic kind of sitting on your shoulder, what are you going to do about it? Well, what I've done about it, and most other traders who come to TraderLab have done about it, is they rely on statistics and metrics because it's tangible. Because if you don't have something tangible in this business, then all you have is something emotional. And that's the lunatic. Fight and flight, revenge trading, fear, all those elements are constantly triggered in a random environment. So if you can accept you're in a random environment, you got to solve for randomness. And part of solving for randomness is solving for the emotional triggers. So we are all emotionally triggered. I feel the same things you do. We all feel the same stuff unless you've had a lobotomy. So since we're all feeling the same things and we all have the same challenges, then what do we do about it? Are you going to do what most other traders do who cannot create sustainability because they're making it up as they go and responding to emotional stimuli? Or are you going to understand and learn about these elements? And then are you going to build a wall, like a firewall, between emotional triggers and business? Businesses have overhead and costs of production. That stops for us, and fees. Can you accept it? If you need approval, then you're in the wrong place to get approved by being right or being smart. It doesn't take smarts in this business to be create a career in it. What it takes is discipline, and it takes vetting trades, so you can only trade when you're in alignment with an edge. That's the business. So if you're looking for approval, a pat on the back to be able to tell your spouse or your significant whomever or your family how smart you are, you're in the wrong business. This is not a business of intelligence. This is a primal business of taking risk for outsized rewards. And when you take risk, it triggers fear. Think about if you're going to buy a house. Isn't there a little bit of apprehension when you sign the purchase contract? But we don't have that experience too often in our lives. Or you're proposing to someone to spend a lot, for a life partner, or you're going into business with somebody, whatever it is, anything that is a sense of commitment. And if it can have potential consequences, you're going to have a sense of fear, or at least apprehension. But because we're in a random environment, that's constantly being triggered here. So any of those emotions you've had, they're on steroids here. Does that make sense? How are we doing in YouTube, guys? Please give a like if you're getting something out of this. This is TraderLab, How we doing now? And guys, how you doing in YouTube? Hope you're having a good day today. Um, and by the way, if you're not having a good day today, there's good reasons for it. This is called mean reversion, and we joke in TraderLab, and you've been following this stream all these years. And it's a joke. I guess you got to try to make light of something. They don't call it mean reversion for nothing. It's because most of us get chopped up in this, and we all have. So the way you can learn about this is you've already paid your dues. This condition is what we call chop. Yeah, chop. And most traders who don't understand this context are going to be trading on the inside, and that means getting bounced here. It comes down here, you buy it, it goes up there. What are you doing with this? Getting abused, right? And if you sell this because you think it's going to zero, what can it do? It comes right back around again. In this condition, there is no inside out trading. You can do whatever you want, and you will have winning trades trading inside out. But what you won't have, most likely, unless, of course, you're special, and I hope you are, is you're not going to have an edge. We all have winning trades is the problem. Everybody's looking for winning trades, and I used to think I just want more winning trades. What I didn't understand was, early on, that winning trades were actually a problem. And I know you're going, what's he talking about? It's a problem because everybody has winning trades. And we believe that if we trade inside out, that we can, there's a winning trade, right? Well, what about if you do it here and then it just comes to the other side? Does that one winning trade give you an edge over time, or is that a loser? If you knew over time, taking in this condition, trades in the middle, you probably wouldn't do it. But because randomly any trade can be a winner, that's going to reinforce behavior that is emotionally triggered, because you're going to remember, and then you're going to work on trying to get more winners. But if you don't understand the condition of the market, If you understand that we're in balance or reversion trading, your trades are only outside coming in. They're not inside going out, no matter what happens. So for me, it's only shorts, right? For me, other traders are going to take this and they're going to come back here for longs. They're going to take this long back here. This is reversion. So you can be taking outside trades back here, or you can be taking outside trades back here. Doesn't matter. And what doesn't matter either, because chances are if I don't get under here, because don't forget I tested a key level, then we can pop out the top. I know that. Do you know it? You see what I mean? And by the way, which way? I don't know. So it's that kind of be prepared, wait for your trades, and it's not about being right. The only way you measure yourself in this business is what's your plan. And by the way, if your plan isn't any good, then you can fix your plan. But the measure, no matter what, is following your plan. Because if you don't have discipline or faith in your plan, then you're in trouble. I talk to traders that tell me they have a plan, and then they say they can't execute it. And I'm saying, well, why can't you execute your plan? Well, and I get excuses. Well, there is no excuse. I mean, you can make excuses to yourself, but you won't be able to make them to me. I've heard too many excuses over too many years. When I was on a trade desk with other traders and working with them and helping them out, I get excuses. And I'd ask a very simple question. Well, where's your trade and what's the edge for that trade? How do you identify it? If I couldn't get an answer to that, then they're gambling. And I'm saying, guys, go to entertainment is one thing, but if you want to be in this business, you got to do something else. What's your loss limit for the day? Oh, you don't have one because you want to make it back. Yeah, you're on your way out. That's just the business. I mean, it's nothing more. It has nothing to do with how you feel. It has to do with what you do. And doing the work is the part none of us want to do because of FOMO. And most of us are looking for all these setups, right? You can come to TraderLab. There's 60 PDFs, and I've shared all kinds of structured trades. But you only need one. And you're going to say, well, I want more than one. You hear that in your head? That's Hyde. That's the lunatic. Now, here's a sweep. A sweep suggests a potential counter rotation. But where are we? We're right here. What is that? The fair price. For me, I got to sell unfair to return the fair, or buy unfair to return to fair. You see, this is reversion trading. So you pick a side. Doesn't matter. So if you don't have a statistical edge, you're gambling. So how hard do you think it would be for those of you who haven't done the work yet, but are interested in creating a sustainable business? How long do you think it would be to actually get one trade and make it your own? Say, this is my trade, and when it shows up, I'm going to do such and such. And I know when this condition, whatever it is, not this one specifically, but a condition shows up, and it's at a location that I've done research on, that I'm going to take a short. What's my probability if I get short out here to come back to this? That's what you need to know. And then you have enough range from out there to here to get risk neutral. And then can you sit through the noise and balance if you think, and that's all you got, maybe that you're going to get here before you get out there. And the lottery ticket is coming under here, which we may or may not do. That is what you call the Hail Mary pass, if you've ever heard of that in American football. Does that make sense? So that's the short plan, not the right plan, just a plan. And you guys have a plan. See, TraderLab, the idea of TraderLab is it's not to say, it's to kind of share with you maybe what the real world of trading is and why most retail traders don't have sustainability. What is it about this? Why is it so hard? I think what's hard about trading is the randomness and looking for certainty to manage our fear and of loss. It seems very logical. I don't want to lose. Well, nobody wants to lose, but every business has overhead and cost of production. If you know where your trades are and that you have an edge, wouldn't you be waiting for it? Like waiting for a bus and not getting on some random bus or just stepping out in front of a bus? Have you ever thought of that? That's really what our business is. So you got to be prepared. So in TraderLab, all of this was done this morning, and I don't know the outcome. It's not, it doesn't matter how long you've been trading. If you've been trading, you know that you don't know. You should write that down. The best you have in this is maybe. Maybe the market will go down. Maybe the market will stay here. Maybe the market will squeeze the shorts because the market now has shorts in it. And so far, and if we don't get below here, we have a reasonable shot at squeezing out the shorts. I know that. And maybe you know it, or maybe you don't. So what's the better side to trade? There is no answer to that. You could trade either side as long as you have a plan. I tend to pick one side. It's just easier for me. I just trade one side. And I'm trading a side that I think, I'm trading the shorts, not that I believe, and remember, I don't have belief. I think, and let me go back to the rationale. Now, it works, there's two sides to everything, of course. Let me give you the rationale here. This is a trend day. This was the day we broke out and we took out 50, which was the previous all-time high, and then we established this consolidation up here. This is not auctioned. So the thing becomes this 54, which is this level, which is our ETH low, and a previous ETH low, I think from this day, or this one, I don't remember. I think here. To me, is weak. Now, it doesn't mean, because the trend is up, we may just not be able to get under here, and then we can take the shorts in here, and, they get carried out in the basket. So that's always possible, because the higher time frame trend is up. From an auction perspective, which is what this is, trading the auction, this is not auctioned. It's just, we're out of here, we'll catch you later. These prices haven't been checked. So the nature of the market is to check this. But again, if it doesn't get under here, then we can just come around and maybe come back up here. Now, here's a little something for you, just to give you the conflicting processes. Remember, we're leaning against 85, and we're leaning against the 70, whatever it was from the ETH, right? Remember, let's look at our structure. This is what's setting up the shorts. The 73 and this LVN at 85. This leans to shorts. That's why I'm doing shorts. There, and the other piece of it was, this is not auctioned. And if we get all the way through here, this is the last consolidation that was too low. This consolidation, look at the symmetry. Too high, too high, too low. Open, this is like open running area. And then, so that's why this is such a key location. Because if I get under 54, I got nothing here except acceleration, and the market's going to have to try to figure out what's going on here because there's no auction. This is what an auction looks like. And this is the freight train. So this is open. Again, 54 is the over-under. So if I'm trading and based on all the structure, it's shorts for me, looking for 54. Never has to do it. Holds 54. These guys will get run over. As easy as that. And here's the reasons again. 72. So it was, this is the overnight volume point of control. So it was 71, 74, 85. 74, 81, and where was it? 60, I forgot what number it was. Yes, 75. So this is our high a day. Close as you get, horseshoes and hand grenades. There's our low, there's our ETH low, and there's our levels. How much more do you need to know? Or better yet, how much can you know? So you can't. So it's mapped out, and then, as they say, act accordingly. And I know that if I don't take out 54, I'm potentially going to get squeezed because I'm in a higher time frame. I'm counter trend. But I know I don't have an auctioned area below. You see the conflict? So all I know is it's if this, then that. If not, then what? If I break 54, if this, then I'm going south. If not, then what? Then the potential to squeeze and come out the high of the day. It doesn't stop me from taking shorts if we come out the high of the day, because I might only squeeze the shorts out and then revert back inside. So I'm still open for shorts from a higher level or nothing. That's all I can tell you about it. So, but this is what trade plan is. And there's going to be days where you just sort of go, well, how do you measure yourself? It's not P&L. P&L is the output of a plan with an edge. How it all plays out, we don't know. And again, you could be taking longs here or shorts here. It's both. So you just have to kind of pick a side and go with it. That's what I do. And then if I get out of alignment, I'll either take a stop or I'll scratch, because I only trade outside. And if it doesn't do and I have trade management that I do also. So if it comes out, I'll get paid. Not the same as if it falls out. And I go on to my next trade. I don't go much further. I don't get more concerned about it because I am following a plan. And the measure for me is not the P&L. It's the plan. If I follow my plan and my plan has an edge, and if I get paid today or even have a losing day, doesn't matter. What matters is following the plan. If I have an edge in a random environment with a random distribution of outcomes, I get paid. If I lose my way and I get emotional and lose control, I'm going to pay. I'm basically throwing dollars out the window. I prefer not to do that because that's never worked in the past. Why is it going to work now? You guys have questions? By the way, you guys who use funded accounts, um, here's something I want you to think about. I find, at least from my viewpoint, and I don't have experience with funded accounts, but I'm only thinking about what that might encourage in traders and or developing traders. I think it could really develop gambling because funded accounts, which I think are okay in a development process, but when you trade your own dollars, I'm going to say you can't buy a new account, when it's on discount, right? And play. When you have your own dollars in the market, it has a very different impact on you as far as the emotional triggers. Do you think if you put $50,000 of your own cash in an account versus a $30, $50,000 funded account that you can renew and blow up with no consequence, really? Do you think they're the same? They're not. So if you're doing funded accounts, that's not real trading, but it is educational. In the TraderLab, I always suggest that you create a process and you start out with one structured trade and you vet it. Then, so you got to do research, you got to observe it, and you come to TraderLab. A lot of us are doing the same kinds of trades, in different time frames or fractals, depending how you define it. So it's all the same. So, but you identify one trade, and then you become expert at it. You have to be expert or else you can't execute it. So you only need one, and you consider it like this is your proof of concept. And you do it first in research. So you say, okay, every time this scenario comes up, and you can use the 60 PDFs of structured trades I've shared, plus a lot of the material that's in the TraderLab and the webinars that are there in the document section. There's all this stuff is available. There's no cost for it. You pick one, and mean reversion, this kind of thing, is the most common and the most perplexing, but it's also the most common. The market is always reverting to a location. It's always reverting back and forth. It's checking pricing. It's a shopping experience. So in different fractals or time frames, it's shopping. Is this too high? Well, what's too low? Well, maybe this is too low. We took out yesterday's low, and what happened down here? Absorption, a sweep. We found our buyers. Now, where's our sellers? They're up on top. What's above them? Buy stops. Everybody's getting thrown under the bus. So if you can develop one trade, the proof for you is if you can do the work, you build a template and you prove to yourself that you can extract statistics. Now you'll know how. You'll understand that this is a business of edge and structure. And when you can recognize and define structure, then your trade is, you know where you will trade before it shows up. And it's not a brick wall, it's an area. So you're already waiting for it. And then if you get a trigger, which is vetted, then you put your trade on and you take your stop, or you get risk neutral based on your plan, and you have a trade management process or whatever, separate conversation. And then that's your trade. Now, you vet the trade, then you do it on sim, see how close on sim you can come to actually, how close do you come to the metrics in an idealized backwards looking scenario. Now you're on the hard right edge where you're sitting with uncertainty. How close can you come at the hard right edge to something in sim that you did with research and looking back when, of course, everything is clear? Now you come to sim and you do it here. What are the metrics? Well, how do you deal with the uncertainty in sim and the fear? Because you will feel it. Can you have an edge now in sim? Now you go to a funded account, which is basically practice with more emotional attachment, because now you can make money or lose what you paid for the funded account. So there's that risk is minimal, but now you get emotional triggers, and now you can learn more about that and start correcting those errors. You'll learn about yourself, you'll learn about the issues, and you can start building guardrails for yourself. It's a sequence. But how do you get off a funded account? Do you stay on a funded account? You have to be very careful. Now, you may not have the dollars, of course, to have your own account. Then you might want to use a funded account to potentially acquire risk capital. That's fine. But be very careful not to take a funded account as just a gambling opportunity, because those habits are going to stay with you. And that will take you out of the business. So you have to, kind of determine for yourself the path you're going to go on. And you should have a plan. How are you going to build this business? What are the steps? What's the process? Not only the next trade. That's easy. What is the next trade? It's easy. What you need is a path and a plan and a self-accountability piece. You are the CEO of your business. If you were working for you, what would be the conversation you would have with that employee? How would you measure that employee? Would there be consequences if that employee didn't follow your direction? You see, you've got to wear a couple different hats here. One of the things you can do is, like in TraderLab, we actually hold each other accountable. Somebody says, I made an error, I did this and that. And it takes courage, by the way, to put yourself out there. If you don't have the courage to be, quote, judged by your peers, you certainly aren't going to have the courage to trade, because now that's ego. When you can let go of your need to be right, that right there, and appear knowledgeable in a chat, now you can let go of your need for approval from the market. If you need approval in a chat room, you will not, in my opinion, be able to detach from your ego in this environment, because your ego has no place here. You have no control over anything except what you do. That's how you measure yourself. And I hope you're getting something out of this, because most of us, we're all interested. We see somebody like me or somebody, we all want to see, let's look at the trades. Well, I can show you the trades. It's not a big deal. Every day you watch a stream, you'll see the trades. If we get into real time, we'll talk, as you know. And there's loads of streams where I narrate these trades as they're developing. But here there is nothing. We're in the middle. There's no trade in mean reversion. That's the mean. So it's either this or that. Which one do you prefer? Pick one. And what do I know? Outside edge, outside edge, outside edge. That's all I need to know. If I take this, that's fine. This is the target, and then out here. If this comes across, you can, right here is support. Can't get under here, you can come across here. That's all there is to this. This is not complicated. It might be frustrating, of course, and you're going to take stops. We all do. Everybody takes stops. Part of the thrill. That's a nice short. This could be your long. This could be, in other words, when you have this, you could trade both sides, one side. I take one side. And if this thing starts motorboating along, I won't necessarily trade it. I'll just wait for it. And then I have another trade up higher, which would be a reversion trade. And if not, I could be done for the day. Now, you may feel like if you're sitting here and you need to do something, that's not this business. This is like a chess game in some ways. It's a strategic endeavor. You just, you're waiting. No different than a hunter, being behind a tree waiting for whatever to come by. And if it doesn't come by, you don't do anything. And if it doesn't, if it isn't exactly what you're looking for, you just don't do it. Because there will be others, maybe if not today, probably there will be more opportunity later in the day, or who knows. That's your job. So this is not a keep busy video game. This is a edge. And where's your edge show up? Well, for me, my edge is here, right? So you all know that from the stuff I already showed you at the top of the stream. So that's why it was shorts. I don't have any longs, but I know about this. So I know if I don't get under here, I could just as well get squeezed out. But I have nothing to do here now. So I'm all right. So that's my plan. So I just stick to one side. And if it rolls the other way, which it can, I just don't necessarily get involved in it unless I have an edge. And I don't have an edge here. But I want you to understand what the business is. It's a business of edge. And I don't have edge all the time. Some days I have it. I trade both sides, I want you to know. But there are times where I just get on one side until it changes. And at the moment, it hasn't changed. And there's no right or wrong here. You could be taking longs from out here or shorts from up here. And you already know my rationale for leaning on the shorts. And I also know the shorts can get abused because of this. So the reason I want to be short is because of this. And the reason my shorts might get squeezed if I was, and I'm not currently short at the moment, is because of this. So isn't this interesting? If it gets under here, it's going to be great. If it doesn't get under here, I'll get squeezed. Maybe. Or it's just going to keep doing this. I know that too. What else do you need to know if you can't know anything else? By the way, so talk about counting your mistakes. Greeny in the TraderLab, and if you're in there, Greeny today, created a little app that's available in TraderLab, and there's no cost for it. Greeny's made it available. It's called the Error Cost Calculator. It's something I started using many, many years ago because, like many of you guys, I write something in a journal and then I never look at it again. Did this, made this error. And I'd make a note about it, but I didn't dig into it. And I also didn't quantify it. It's like, oh, I'm not going to bail out. And I put a sticky note somewhere. You know what I mean? So there's a sweep. Remember, this is the outside edge. Now, I'm no longer short, and it's not because I don't want to be short. I just don't want to be going through this while I'm streaming. I just don't want to do it. And this is another issue. So that's what sets this up. And again, my primary thesis is shorts today. And that doesn't mean anything. I always have to say it to you. But the error cost calculator, I decided instead of being, oh, I'm not going to move my stop or I'm not going to bail out because I don't want to give it back stuff, which we all do and feel. Instead, what I did was I said, I'm going to start measuring not only the trades I skip, but when I move, whatever I do, that isn't in my plan. And it ended up being thousands of dollars a week, which kind of blew my mind. And then you put a monthly number up there and you really get nauseous. And I realized that I was working really hard to be a profitable trader. And I would be profitable and then I would kind of skim the surface, And I realized my profit, I already had the profit. I was just giving it away with the errors and the lack of discipline. And I never quantified the cost. Well, I quantified. And I'm going to say it was a it was a nice, not nice, but a 5-figure number on a monthly basis. It was a substantial number. And I wrote a check out and I pasted it to my monitor. This is back when we still had paper checks. And every day I'd sit down to trade. I'd look at that thing. And I got angry about it at myself. And the anger was a result of, you have control over this. This isn't like the market's doing this. You're doing this to yourself, you see. Let's see what this thing does. Remember where the hatch is. So once I quantified it, it really made a big difference to my trading because I kept the check up and every day I had to look at it. So maybe the short's going to work. What do you think? What do you guys think? OFTM, the volume profile today or yesterday, which one are you asking about? Oh, Jirach, thanks for posting that. In the TraderLab, trade loss tracker just got posted in there if you haven't seen that. So let's see how this plays out. So you guys know my plan. You're probably tired of hearing about why I'm shorts only, but that's just my plan. And it's not, remember, it's not about being right. No clue. Not my job. This is what the TraderLab community looks like. It's a professional community. It's for serious traders. It's really about the business. It's the leverage of the community. There's a lot of work done here by a lot of traders who contribute. If you have something to contribute, come to TraderLab. If you don't, feel free to develop, and then you can contribute just like everybody else. It doesn't matter how long you've been trading. This is not about, we're all developing traders. I'm doing this going on 46 years, both professionally and out here with you. I'm developing. I'm always looking at things, thinking about it, going, what about that? What does that mean? Can I do something with that? Let me check that out. Let me do replays on the weekend. Let me see if I can cut a tick off my entries. Let me see, over the thousands and thousands of trades I've taken, probably thousands of stops too, who knows? Would that make a difference? Yeah, it would. Here, let me try. I'm getting back. I want to show you what was posted this morning and when it was all posted. This thesis I'm talking about. Where was it? 9 a.m. Oh. And you see there's a lot of other posts. But I want to bring you back to where all this was being done. Maybe I'm going back. What time? 9. Wow. Trade plans. Not just buy it. And I'm not saying I have the answer, guys. Everybody takes stops. Everybody, when things change, we got to change. It's not about it's going to do this. It's like it might do this. It might do that. I don't know. I spent a lot of time, though, this morning talking about, you can see my charts are posting with the arrow, which I showed you at the top of the stream. Higher time frame chart. Trade plans. And we're talking about Friday also. So all of these things build on each other. Okay, so just saying. And there's a library of webinars here too. Ned, thanks for curating this. Statistics. This is the primer webinar. It's got about 34,000 views or so-ish, I say. I don't know. You should start with that. It's about an hour. Then there's Holy Grail of Trading. Well, there isn't any, but how close could you get? Is there such a thing? Well, I think there is, but it's not what you think it is. It's you. You're the Holy Grail of trading. If you learn how to trade, not indicators, not the latest hot, AI or any of that. Trading's been around, since the caveman. Nothing has really changed. We have technology, but the process is still the same. So there's no secret sauce. There is no Holy Grail. There's only process and market mechanics and learning how the market works. Most retail traders think it's a business of indicators and timeframes. It's not. If you don't know how to use an indicator and where to use it and when to use it, it's not trying to put the market in a box so that it always repeats. The market is never repeating. It's somewhat in a sense of it. There's similarities, but every moment is unique. Stop gambling. Start winning. You should watch that one. Why do most traders using indicators fail? Are you trapped in Trader Groundhog Day? That was me. Work hard, wake up in the same place. And what is that all about? That's curve fitting. That's what that's all about. Trying to fix it. Well, let's make it better. I could have got in over here. Let me get my MACD here in my RSI. Oh, look at that. It would have gone down. So next time, except what is next time? Where is it? Is it there? Where is it? Oh, do I get long here or am I only getting short there? What am I doing? Do you know what you're doing? If you go, I don't know what to do here, then you need a plan. And the better thing is until you have a plan, don't trade. Because the discipline is the ultimate challenge. You have a plan, you got to wait for the bus. The bus doesn't show up, you sit and you're a tourist. If you don't have a trade here, because you have no edge, why would you gamble? I mean, why? I always look at gambling like entertainment. I'd say, hey, go to the buffet, get the cocktails. Maybe they'll comp your room if you leave enough dollars with them. At the casino. This isn't a casino, unless you're the house. Then you're sitting with the house side of the table with edge. Edge is vetted games, if you will. Casinos only play games with edge. They do really well. Well, do you think if you approach this business like a casino who's not making it up, and if they pay a gambler, they don't skip the next hand like you will, or what I did, emotionally, if I put a trade on, let's just say I put a trade here and I get stopped out. I'm now in an emotional condition. I'm triggered, right? Anger, whatever, all those emotions. Well, now I get stopped. Let's say I get stopped here and then it comes up here and I don't take this trade. My job is to take this trade, if it's my trade, I'm saying, okay? And now there's my trade. What was this? Was this a failure? No, it's just random. If it's my trade, okay? Is everybody with me? How many times have you gotten emotionally attached to the last outcome when it's already over? And then you don't take the next trade because why? You don't want to lose again. Well, you got to be willing to lose. And if you're not willing to lose, how are you going to gain? So if you know you have an edge, it's not about winning or losing. It's about having the confidence that the edge in a random environment will show up. Whether it's here, or here, if it has a vetted edge in a random distribution of outcomes, the edge will show up. If you don't know where your edge is, then you're just going to gamble. And that's not a recipe for sustainability. I think we all know that. Is that making some sense? Talking about yesterday's volume profile today, which one are you using for your value high and low? Value high and low is from yesterday's RTH. So yesterday's value area high is up here, and the value area low is somewhere below here someplace. There it is. And then we have developing value area high and value area low. So the developing value area is below Friday's value area. That suggests too high. The test coming up above, too high. That's why I'm only on shorts, which doesn't mean anything. But everything for me is suggesting short, notwithstanding this support. So that's why I've got this thing kind of, I don't want to say boxed in, but I know my levels. I know what might happen. I don't know what will happen. So I'm only on shorts today, and I still understand completely that I can get squeezed anytime, anywhere, doesn't matter. But can you guys see why I might be on the shorts, but I know where my support is and I might not get under there? By the way, everybody struggles with discipline and emotional stimulus. Most of that, by the way, guys, the recipe potentially, and I always have to say that because everybody's different, and is to just do the work. If you're saying, "Hey, I can't manage my thing. I don't have the discipline. I'm triggered." It's not complicated. Here's what's not complicated. You're not the first person to go through this. We all go through it. So if you're having problems with discipline, there's a solution. It's in TraderLab, and it doesn't mean it's going to work for you because you still got to do what you got to do. In other words, you got to do what's required to solve this. But you can speak to other traders. See, we've all walked in your shoes. There's nothing unique about this business at all. What's different about it is it's random. That is the problem. And the randomness triggers emotional responses, and we don't have control. You build control by defining your business. In other words, how do you get a yield? Where's your net? Where does it come from? It doesn't come from gambling. So if you know your trade is actually, well, for me, shorts only today, and maybe for you, longs only, or both, doesn't matter, then you know where your trades will show up. If you don't know where your trades will show up, then that's a problem, don't you think? I know where my trades will show up. And that doesn't mean the market will ever get there. Right? My trades will show up there. My trades will show up there, there, there. That's the high of the day. So I had a short there, I had a short here, took a stop, had a short there, got a scale, got paid, have a short here, and I'd still be in it if I wasn't streaming. That's all I can tell you. And I'm okay with that. I trade the ETH. There's plenty of activity. No problem. If you get nothing out of today, because you're looking here and you probably are nauseous and you need Dramamine, it's that trade plan is what the business is about. Then edge. And if you have edge, then you just come in here, you bring your plan, you wait. You guys ever take a bus? You wait. Otherwise, you're just keeping busy and gambling. Not sustainable. There's other tools here. I'm not going into that much of it today, like order flow phenomena. There's a lot of other things here that I typically talk about that I'm not doing today because the condition of the market is very important to understand. Now, when you get advanced understanding, you can really drill into this, and there's other things you can do. And today, I just don't want to go there because I don't want to encourage anybody to be taking a short here or to be taking a short here. You see what happens? The range is the problem. Let me show you a couple of things while we're at it. If you look here, what is this? Anybody know what I'm looking at right here? What is that? Let's do a little. What is that? So we know about this, and we know if there's something too high, the low volume up here. We know this is Friday's retail price. Maybe it's too high. Now I'm going down in, as you think, time frame, okay? And now I'm rotational. What's out here? What is this? Well, right, value area low from Friday. Now I'm getting more nuanced here because this is profile stuff. You can learn all this. You don't need to learn it, right? Early on. What is this? I'm not paying that. Yeah, but it's on sale. I'm not paying that. Yeah, but it's on sale. Where's my retail price? There. There. If this is outside, and I got this over here too, I can rotate. If I come outside and this is too low, I can rotate back. It's still rotational trading. It's called mean reversion. So this sets up your outside. And now if you come out here, you can come right back in here. Now, this is very tricky. Now we're making new lows. And where are we? This is like a tease. There's your sweep. We can come all the way back here. This is important right here to observe. This layer right here. Let's see what it does right here. And none of these are trade recommendations. This is not a get in, get out, be a Subway purse snatcher. This is very much rotational trading. So you just have to have a specific plan for it. And one of the pieces in this environment is trade management, which is different than you would have in a running environment. This is not a running environment. This is a rotational environment. So in this environment, entry and discipline are very important, getting risk neutral, and then managing your trade, not trying to hit the ball out of the park. So I kind of think of it Subway purse snatching, but not really. But in a way, because what was here? This is important. This is support. You get below it, then we want to see the behavior. Now this is coming in here. Let's just see if there's behavior. I got a sweep here, suggests counter rotation. Notice the behavior. I had a sweep here, gives us the counter rotation. The sweep here gives us the potential for counter rotation. This is important right here. Let's see what happens right here. Just keep an eye. This is not a trade recommendation. We have a level. And if it falls out of the 54, the Acapulco cliff dive. Let's watch the level. This is called the IB continuation trade. It's not a recommendation. This is very funky. We have a high probability of taking out either the ETH high or low. You will observe we haven't done either. We can do neither. We can do both. There's over 90% probability we take ETH high or low. Considering what we're not doing, what would you think might happen? Now, here's what might happen. We have a sweep. If we can't get here, and we may eventually or not, the shorts in here and with their stops above here, if this holds, can get squeezed out and we're going to come back here. That's what I know, because we're either breaking out to come here for the statistic and maybe under here, or we're going to take the stops out here and come there. Does that make sense? It's if this, then that. And if this stays too high, then what? So it's under here, at least on this, and then either you come back across or we keep going for this. Sweep. If I get above here, then the potential is to come there. That's what I know. And this will make you nutty because you're going emotionally from euphoria to depression, aren't you? I mean, I feel it. You go from, I got it, to, oh no, I better bail out. But where does the trade fail? Oh, I don't want to give that all back. What does that have to do with trading, by the way? Nothing. That's emotions, fear of loss. You have to determine an understanding of the difference between your fear and your plan. Your plan is built on not operating in a fear state, by being logical and objective and having metrics. That's the job. What happens, It's like buying a ticket to ride. What's happening? I don't know. What's going to happen? Definitely don't know. What is this? A sweep. What does it suggest? Rotation. To where? Resistance. What happens if I come through here? Stops, 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 stops. Then what? What's over here? Mid, VWAP, and here. Back to balance, reversion. So this is important right here. You see? This is trading. Now what happens? Hey, let me know. Because I don't know. But I do know what my plan tells me to do. And that's what's over time going to pay me if I execute my plan that's been vetted with an edge. Hope you got something out of this, guys. If you have any final questions, post them. If you have further questions, come to TraderLab. There's a link in the bottom of YouTube. It's in the Bookmap Discord server. There's no cost for it. You do have to confirm your Discord username. Keeps the spamolators out, which I think we could all appreciate. And then there's no cost. Come to TraderLab. You'll find the TraderLab chat. There's a lot of other education available to you guys at no cost. Order flow with a high tier tool like Bookmap, stocks, options, crypto, algorithmic behavior, market maker behavior, swing trading, position trading, a lot of different markets. All of this that you see here in TraderLab can be applied to any time frame, any market. Doesn't matter what you trade. I know traders that trade ETFs with this process. It's all a function. The market behaves exactly the same way in all time frames. So if you're trading a higher time frame, and even if you're a position trader, this is the same process. When I early on in my career, I was a position trader, and for me, short term was 2 to 3 day swings in the big S&Ps. That was short term. There was no day trading. All my friends were on the floor. I sat up in an office, and and I started up off floor before there were PCs or the internet. So you'll understand I started with classical bar charting. So I was there when indicators first became available. And we didn't have PCs, but we had terminals early on. And then it kind of evolved, from there. But in fact, we used to run an extension cord from the exchange all the way up to, I forget where, someplace in Massachusetts. We're talking a phone line to get data, real-time data. So that could be plotted. I'm trying to remember what it was. ADP. It was an ADP comp trend, it was called. I think that was the first. I can't remember anymore. It's been too long. And then I went to CQG after that. So TQ 2020, I think that was their first thing. It was great. Nobody had this stuff. But you had Wells Wilder and all those indicators. So I spent years pulling all those indicators apart, trying to figure out what was going on and can I make them better. And then I started putting them, I'm going to say, just like you guys, multiple indicators and multiple time frames. And oh my goodness, we'll get the right fit, the right mix. It'll be great. No, it was random. And my inputs were random. So it's the old saying in computers was garbage in, garbage out. But because the market's random, if you have random inputs in a random environment, you're not going anywhere. You're going to have Trader Groundhog Day. That's what I had. That's why I created the label for it. Work hard, random winners, wake up in the same place. No confidence in your plan because you don't have a statistical metric. You only look at P&L, and P&L is the outcome. What about the input? If the input has an edge and you can execute it, if you're no different than the casinos, they're going to extract dollars from the gamblers, but they still pay the gamblers. But they also give you the cocktails and the tickets to the buffet. How can they afford to do that? Because they only play games with an edge and they don't change it. Can you do that? That's our business. Are you interested in learning about the business? Then come to TraderLab. There's no cost for it. And please give a like if you're visiting in YouTube. Hope you got something out of this. Visit the TraderLab. It's a great community, but it is about the business of trading, and it is for serious traders. It's not romper room. It is business. If you're inclined, while the TraderLab is still available and there is no cost for it, feel free. I'd like to meet you there. If you have your questions, bring them. Leave your ego at the door. This is trading. We can't afford an ego. That's all I can tell you about egos. The reward comes from edge, execution, and some humility also. Thanks for visiting at TraderLab today, guys. I look forward to seeing you soon. And don't forget to like on the way out. Support the stream and subscribe also if you haven't.